All right, good morning, everybody. Happy Sunday. So we're going to go ahead and get into just sifting through the different markets here and kind of doing monthly, weekly, daily outlook here for the upcoming week. I took off the last week of November, so I really haven't looked at the markets within the last week. Hey, what's good, man? What's good, Scar? And so yeah, kind of looking at a fresh market here. Haven't peaked the markets in like a week. Really nice bullish move here after a really bearish previous week. So let's kind of break it down. We're gonna look at a few different markets here. We'll look at indices. We'll look at currencies for a bit, the dollar. We'll look at gold, and then we'll also take a peek at crypto too. So every week on Sunday or sometimes Saturday, what I'm doing is first I'm starting off on the weekly time frame here. And first, I got to mark out my important levels, which is going to be my previous week high right here. You can see that really bullish week closed right near the high. And I'll mark out my previous week high, and then same with my previous week low. So far, what I'm looking at is I think they do go and run it up by the end of the year to all-time highs one more time. I was really bearish, but after a sweep of this low from this weekly candle right here, no close below that, so it wasn't really indicating to me it was a shift in market structure lower. Looks more of like a sweep, and then this bullish reaction higher is kind of a telltale sign that we're gonna go up here because I mean, just thinking about it naturally, we're closer to this high than I would say we are down here. So we are trading in this weekly volume imbalance right here. So I want to see. I'll be looking at that, how we react within that level here, but after I'm on the daily time or the weekly time frame, I'm going down to the weekly time frame here. Just kind of building that blueprint. All right, so this huge down close candle, I don't know if you remember if you're watching this when this happened, but this was that day. I believe it was the result of a Trump tweet about tariffs, and we were messing around within this range for a long time, and then we ended up pushing higher. So there was a lot of liquidity on the high and the low within this range. Okay. We went all the way down. So kind of had like that shift in structure here and then had that inversion fair value gap right here. Began breaking down lower and lower and then eventually took all of the sell side below this low right here with this big manipulation candle down. And then that resulted in the next 1, 2, 3, 4, 5 days going higher, and now we've taken this high. To me, the sweep of, or not the sweep, the run on this high looks like a market structure shift to me. And we've gone well up into the upper portion of this daily SIBI right here. So I would want to see the lower portion or the 50% of this start to hold. We could get some kind of wick down into here, and then I would be looking at this daily wick here as like a discount wick for us to use as discount levels. So this really would be a nice area. Um, I wouldn't want to see it close below like the 50% of this daily BISI right here. But we are in a really interesting area because of this daily SIBI that I want to see used as inversion. We haven't actually created or used it as inversion yet. You can see that we closed, and it's actually, that's very far away though, that volume imbalance right there. So I'm just going to use this daily SIBI right here as my inversion levels. But I want to see on a body basis the upper portion of this hold. And then if we do explore down here, I want to see it. It's okay if we get a close below the 50% of this daily SIBI, but I would want to see for bullishness, I would not want to see us close below this 50% or the consequent encroachment of this daily BISI right here. Because we also have this wick in line with it. So if we can reach down here, this is going to be a really interesting area, right? You would want to have this wick marked, and I'd be looking for something like this. Where's my arrow? I'd be looking for something like this. So with that idea, we could get something like a Monday, Tuesday retracement low of the week, or if we're going to be really bullish, we'll just get a Monday low of the week and then get like a Tuesday, Wednesday, Thursday um, push higher. So that brings me to wanting to see what the weekly calendar is going to look like. I'll just screenshot it and bring it over here because we are starting a new month. So that means we have a new monthly candle. All right, so based on this, we have some interesting things here. So we don't have NFP on the first Friday of this month because with the whole government shutdown, obviously it's not shut down anymore, but news was a little wacky following that because NFP was on a Thursday, like within the middle of the month, so we don't have it on the first Friday of this month. But pretty good week for news. Nothing on Tuesday here. I'd want to wait till 10 a.m. here on Monday to trade, but Monday is definitely going to be tradable. It might not be the best or smoothest price action because of Thursday, Friday being bank holidays, so sometimes Monday can open up a little bit wacky. Um, but definitely still tradable. I'll be looking for trades on Monday. And yeah, we could get something like a Monday, Tuesday low of the week or a Monday low of the week and then a push higher. I'd be looking at these relative equal highs up here. We can also see if there's like a weekly high. So that makes me want to move this right here with this weekly high just to be safe. Yeah, but that's a swing high resting right below a daily SIBI right here. So this is going to be a big draw on liquidity for me. This would be like my bullish weekly targets right here. Okay. So whenever you have a swing high or a swing low resting right below or above, so we'll just say since this is a bullish scenario, since we have a swing high resting below a daily SIBI, this is a really, really strong draw on liquidity for me. And it's also a weekly high right there. So I'm actually going to leave this marked on my chart. Um, Market that so I don't get it confused with the previous week high. But yeah, this is shaping up to look pretty bullish to me. And then once we get the inversion of this, that's going to confirm that 100%. But yeah, with this action right here, really I'm glad I didn't trade last week because I would have been probably looking for shorts all week and we just had a giant bullish move higher. What was that? Like, yeah, 1100 points higher. But we're really just disrespecting all bearish arrays. Like I was looking at um, in the Discord, we've been looking at like this volume imbalance right here, which you can see we got a close above, used it as support, pushed higher. We were looking at this one right here, which we have closed above and used it as support right there. So very, very bullish to me. But yeah, this down close candle would act as your order block. I wouldn't even want to see us go all the way down to this opening price though. I would just want to see us use this wick. So every day in our Discord, I'm marking out daily wicks that I'm going to use for that day that are prominent to me. If we can, at some point during the week, trade within this wick, this is going to be very important to me. I can also use this one right here, but this is a longer one and in line with this daily BISI. So this is really of significance to me. And then I'll also use the quadrants of this daily SIBI right here. I want to peek at like the 1 hour time frame down here. Yeah, so we can take a peek at this price action right here after we swept this. It's really looking like a market maker buy model. So original consolidation right here. We had these relative equal highs, accumulation inside of this new week opening gap. That's where the low of the week happened. Move higher, accumulation, stab down into that daily fair value gap, or hourly BISI right there. And then, yeah, you can see this is just why I did not trade last week. We did have a really big move higher, but just taking a look at this, like the hourly candles, this does not look like solid price action to me. This looks like stuff I would have gotten chopped up in. Um, so I was happy to end November on a high note there. But yeah, if you are looking at NASDAQ, I would definitely have these levels marked. Okay. We can go take a look at ES now. I'm gonna leave that. This will be my bullish weekly target. So you can see that ES is the stronger of the two indices. So we had the same thing, sweep of this was not as deep of a sweep as NASDAQ had. We actually closed below. So this is what's referred to as body SMT. This is actually taught by ICT, where we have a prominent low right here. NASDAQ actually closed below that, while ES did not have a body closure below it. It only had it on a wicking basis. So that's going to tell us two things here. That's going to tell us that ES is the stronger of the two indices, and it's a bullish SMT. So that kind of explains why we're trading a lot closer to the highs on ES. Maybe at some point, if we really are going to be bearish for a extended period of time, this could be like the last manipulation higher to sweep this, and we would expect that ES would sweep this and then have the move lower, while NASDAQ failed to sweep that and then had the move lower. So that's looking really far in advance right there. But this is just what we're using to further confirm our bullish bias. Again, I don't require SMT in my trades or in my trade ideas to like confirm a bias. I just use it as further confirmation. I feel like a lot of people lately have been saying like you need SMT in your trading, you need it. Um, ICT himself has said that you don't need it. It's just a further confirming tool. So um, yeah, just kind of putting that out there. But so ES actually has inverses, and I want to get my levels out here. Same thing I did with uh, NASDAQ. We'll just do this really quick. I want my previous week high, previous week low. And then once the weekly candle opens, I also mark out the weekly opening price just to kind of stay in line with weekly PO3. All-time highs right there. Oh, you know what I forgot to do is mark out my previous day high and low. So previous day high for NASDAQ is the previous week high, so I want to mark out the previous day low right here, which is also a daily BISI. So this is really what I'm eyeing. previous day low. These are levels you always got to have marked out on your chart because you really need to know where you're trading, and the institutions are using the daily chart to it's where like the major liquidity lies. And yeah, so I want to have these levels marked on my chart at all times. I do it every single day. I leave these levels marked on my chart all throughout the week, and every single day, um, well, really every single night when I'm doing my um, daily analysis, I'm marking out the new previous day high, the new previous day low, and really like the last 3 days previous day highs and lows if they're relevant or close to where we're trading. So daily BISI right here, I would expect this to be a breakaway gap. So let's compare, right? I actually want to put these two side by side and kind of talk about why. This is kind of like how you can anticipate breakaway gaps. So what do we already know about ES? ES is more bullish, right? How do we know that? Because of how we engaged this liquidity. Wicking basis, closing basis, right here. So we already determined that ES is more bullish. What else is confirming that? Well, we've already inversed and uh, shown that we have more of a willingness to go higher by inversing this daily SIBI, while NQ has not done that yet. But we would expect it to because ES is kind of paving the way for NQ. Now let's compare the last few days of price action. Is we have a daily BISI right here. Okay, this is much larger displacement compared to the daily BISI we have on NQ. If we're going to treat this like in market maker models, right, where we're using those stepping stones to move higher, we would want to see us treat this as a inversion. Because with this entire run lower, where is your inefficiency? The first inefficiency created on this entire run lower is right here. And the only, if you actually notice that. So now that we've traded above it, anytime we have an inefficiency or a gap and we're bullish, do we want to see the midpoint of it traded below? No, we want to see it show a willingness to stay above on a body basis, meaning we would not want to see a body closure below the midpoint of this if we're really bullish. Now, if we did get it, I would still maintain bullishness, but I would not want to see a body closure below the midpoint of this. Why is that? Because if we take a look at our quadrants on this daily SIBI right here, and I want to make this a little bit bigger just so it's easier to see. This is the lower quadrant of this daily SIBI. What does it look like it's in line with right here? The midpoint of this daily BISI. So now I'll mark this one, make it a different color. And what do we notice? The lower quadrant of this daily inversion fair value gap that we're anticipating to be inversion is right in line or almost in line with the midpoint of this daily BISI right here. So that's significant, right? Using the logic that we wouldn't want to see us trade below, and look how we've already used the midpoint of this daily inversion fair value gap. That's like right here on this Friday candle. We opened, tapped it, and closed higher, right? So that's already telling me that we're very bullish and we inverse this. But if we are going to get like a Monday, Tuesday, or Wednesday low of the week scenario to then keep on pushing higher, I wouldn't want to see us go and close below the midpoint right here, because that would be closing below the midpoint of this daily inversion fair value gap, closing below the lower quadrant of that, which would tell us we're weak, and closing below the midpoint of this. So that would be three things right there telling you that we're very weak, which I would not want to see. So what does that mean? I would want to see this be a breakaway gap, but I would want to see us use this as support on a wicking basis on NQ. So that's how we can use quadrants. That's how we can use and compare the two indices. I know there's three, but I only use the two um, to kind of determine what we're looking to see as far as price delivery. So if that helped, let me know. I feel like that was a pretty good explanation on how you can use those to kind of determine bias and again price delivery. But those are levels that I'm going to be looking at on the daily chart that are going to be important moving forward. So this is a swing high, daily swing high right there. I would assume that's also a weekly high. Yep. So we want to have that marked on the chart as a buy side target, and we'll get NQ off the chart here now. So that's going to be our first bullish target for the week. Remember when we were talking about highs, if in a bullish scenario, highs that are resting right below daily SIBIs, right? So going back to NQ, this scenario right here, how this is a really good bullish target and draw on liquidity. What do we have right above this? Looking left, this daily volume imbalance right there. So I would want to have that marked on the chart. That makes this an even better draw on liquidity for me, and I would want to see this be my second buy side target. Best case scenario for buy side targets on the week would be all-time highs. Right there. So I'd want to keep that on the chart as well. And yeah, so we already explained this delivery, why I would want to see certain levels hold and not get traded below to continue indicating bullish price action to me. And then we talked about what we would want to see next as far as, okay, so this holds, then we would want to see this delivery up here to these targets right there and here and all-time highs. So I would expect all-time highs to get hit on ES first before NASDAQ, and that's pretty obvious considering NASDAQ is much farther away. Okay, so that's going to be it on indices right there. I feel content with that breakdown. I feel like that was a good breakdown right there. Now let's go to, I'm going to very quickly do currencies just because currencies have kind of been messy lately. But if you're watching this back, or maybe you're joining after we just did that breakdown, I would definitely go back and watch that breakdown on the two indices right there and that explanation on what levels I would want to see hold and everything I went through on these inefficiencies, because I feel like that was definitely something that could be helpful for someone who is trying to understand um, price delivery and quadrants and how you can use the two indices to um, establish a bias and anticipate certain price runs and what levels to hold. So that should definitely be helpful for you. All right, so looking at currencies now. Let's go to the weekly time frame. Again, it's a little bit repetitive, but doing the same exact thing every single week is what's really going to help you kind of just get into a routine with things and get extremely comfortable with your analysis, right? So marking out previous week high, previous week low, right? These are relative equal lows on the weekly time frame, so I'm going to continue being bearish on currencies on EU right here. So this is Euro futures because what have we done already is we've swept this high and we've been breaking down, just slowly going lower, right? And this is what I meant when I was saying that I want to go through this quickly is because this delivery has just been piss poor, but it's still valid because I want to see these equal lows get hit. I'm gonna get this out of the way. Gonna get this out of the way. Doing the same thing, previous day high, previous day low. So yeah, this is just really, really bad delivery. Haven't traded currencies in a while because of it. There was a time during the summer, late summer, where I was trading currencies a lot. It was kind of like up in this area right here where it was looking really, really clean. Like the longs up into these highs was super, super clean on the lower time frames, like right around this area right here. So yeah, this was late summer, August and September, um, even in July down here. But then we kind of came into a mess. Eventually hit those targets, and then began moving lower. So definitely bearish on that. Previous week high, previous week low. Trading in this weekly inefficiency right here. So I'd want to have those quadrants marked on my chart. That's a crazy wick. This is what I mean. This is very, very manipulative price action on the currencies right now. So staying away, but I would want to see us continue lower. So yeah, very, very quick uh, look at the indices, or not the indices, the currencies right there. So let's take a look at dollar here because dollar does influence indices. So I want to do a little bit of a deeper dive on dollar here because how we deliver price on the dollar is again going to directly influence how indices deliver. So I want to be able to kind of understand what's going on here. I haven't looked at the dollar, so and I didn't look at the indices as we were breaking them down, so this is all just fresh analysis, right? This is not me like looking at it beforehand and then breaking it down as we go. This is all just um, like me looking at it for the first time. So we had our monthly close on dollar, very tight month. And due to that, I would want to have my monthly high and low marked. So I'm going to get rid of this and this. Then we want our previous month low. We have a little inefficiency right here. We've swept this low, these relative equal lows, and we've just been accumulating for the last couple months. And with the whole um, political side of things, makes the market a little bit more uncertain because I think people are uncertain on where they want to kind of put their money. So we've just been accumulating, which has been the result of um, currencies being poor price action as well. But I still lean more bearish on the dollar longer term. We have had a bullish rally here after a sweep of July low. Okay, I want that previous week low and that previous week high. And again, you want these levels marked because watching how we respond to these levels is going to help you determine for the week if we're expected to have in a bullish scenario, if we're expected to have a continued rally or if it's going to be a sweep, like a purge and revert type of deal. So it literally helps you determine bias along the way as price is delivering throughout the week. So if you do not have levels like this marked on your chart, you're trading blind. We delivered off of this weekly BISI right here. This was an important high. We swept that. I'm looking at this weekly volume imbalance right there. And we have some buy side above there. So I want to do my 20-day look back right here. So 1, 2, 3, 4, 5, 6. So this is your high and low within the last 20 days. Trading right in the sweet spot of that. Order block. Yeah. So I'm looking at this to be an order block right here. So I want to have that marked on my chart. And I also want to, oh wait, yeah. I want to know those quadrants on the order block to see how we're delivering. I use the body and I will also use the wick or the wicks. Just I use both just to kind of get a read on both levels. And we're holding the upper portion of it. We got long wicks like on the bottom. Short stubby one up here, but on the bottom there's a long wick, so that's kind of why I want to include it. You could even do something like this where you're using the body up here and the wick down here. But I'm just going to use the entire thing for the bigger range. If we were to close below this midpoint, it's going to be, I would say, very bearish to at least this. Then we could even look down here. But right now, I'm still sticking with that bullish bias towards previous month high, previous week high, right here, relative equal. So whenever you have two important timed liquidity points like that, and they're relatively equal, good draw on liquidity. We have this over here, and then a volume imbalance right there. So I would want to mark that, push it across. So I would imagine that a lot of people are probably expecting to be bearish on dollar right now, where they think, oh, we swept this high, and now we should go and take this low. We could go take that low, but I would want to see us continue higher and use this as a bullish order block. Because what did that order block do? Went down into this inversion fair value gap, the very, very high of it. Same with that daily candle right there. Huge rejections away from it. So that's indicating really bullish price action. Took out that high. So yeah, I'm looking at this as an order block to continue higher. Um, Daily inefficiency right there. So I'd want to see a draw or us draw back to that as um, again like a draw on liquidity, but ultimately I would want to see us take this, draw back there. So yeah, bullish on dollar. Keeping that daily order block marked. I'm not going to leave the quadrants on there because that's when the chart gets a little bit messy. But I just always keep that in mind and seeing how we're delivering from that throughout the trading day and throughout the trading week. So that is going to conclude, let's see, indices, currencies, dollar, and then we can go take a look at gold, and then we'll take a look at Bitcoin to finish us off. If you're trying to pick a top in gold, you're fucking dumb. Just keep riding it higher. I'm not trading gold. I don't have any positions in gold. I haven't had any positions in gold for a long time. Um, but I want to keep previous month high. I forgot to look at the previous month high on and previous month low on indices. I'm not going to do that on stream. I'll do it later. But yeah, I want to keep those levels marked. I can get previous month low off there actually. So that's important. I want to see previous week high right there. I want previous week low. So yeah, relatively equal. Obviously closing right near the top. I would expect us to go take this pretty early on in the week. Previous day low. So let's kind of walk through this delivery. It's been a little bit ugly, but what the hell? Yeah, been a little bit ugly, but not sure why this moved. All right, so created the high, had a bit of a retracement, stabbed down into this weekly BIST right here. I was looking at these two because these are just the most prominent, right? We have some down here, but they're very, very small, kind of like lethargic gaps. But these two really just meet the eye right away. We held the upper portion of this one. The wicks did the damage, so you can see this one went outside of it, but that one was okay because it was just going down into this weekly BIST right here, which was just a very shallow touch. It didn't even go and touch the upper quadrant and had large rejection away. Looking at this one again, holding the upper quadrant right there. When we did go lower on this, we just touched the lower quadrant. And also look at this wick right here, right? Couldn't even close past midpoint. If it did, I would expect a deeper push down into here, but it wasn't able to do that. Held the upper quadrant right there. All right, so then we created this swing. So this swing was created inside of this weekly BIST right here. So 1, 2, 3. The swing is your 3 candle pattern. Look at this candle. To the left, there is a higher low. To the right, there is a higher low. That's your swing inside of a fair value gap. So this would be like an intermediate term low. I would not want to see this as long as we're bullish. I would not want to see this low get hit longer term. And then we were pushing higher. Also, what kind of confirms bullishness? I mean, really just looking at this candle, you could say, okay, yeah, we're really close right here. I would expect this to get punched, but I'm also looking at this large candle right here, right? And we closed above, or not candle, wick. And we closed above the midpoint and the upper quadrant. So I wouldn't just expect like a punch above and then us to drop. I want to see us continue higher towards all-time highs. Let's keep that marked just for a sec. Okay. So we could see a BISI formed right here after Monday's close. And if we could, this is kind of just thinking far ahead with a very specific scenario, but if we could open up on Monday and just keep pushing higher, even if we immediately swept this high on Monday with a very, like, with really no significant retracement on the daily time frame within that candle, I would still expect this to be very bullish because then we would create a daily BISI right here in line with that weekly wick. And whenever I have something like that, that's going to be a high probability fair value gap to me. And I would want to see us use this future BISI that would be created right here for a fast run higher here towards all-time highs. So that's kind of just thinking of a scenario like a lot of things would need to happen, but it's definitely possible. But yeah, I would want to use the weekly wick to kind of help me gauge order flow. I'm looking at this one right here. So we weren't able to hit that midpoint of this swing wick yet. We left a high, a daily high right below that wick, the daily swing wick, the midpoint of it. So that's unfinished business right there, right? We will want to go and poke that. Um, yeah, I think that's going to be it for gold for me. I haven't traded gold. I wanted to kind of put some longer term investments in gold when we were trading down here in the weekly BISI, but honestly, I was just unsure if we were going to have a deeper retracement. So I kind of just said, okay, I'll let it do its thing. I'm not going to try and um, mess with gold like that. But yeah, that's kind of it for gold right there. It's just kind of obvious. Just continue push higher, and we'll finish off with Bitcoin. Bitcoin has been fun. I called the high on Bitcoin in the Discord at the beginning of November, right here. I said I think Bitcoin could see 70K again, and I had these levels marked, and I had this fair value gap. Why this daily BISI? Why not this one? Why this one? And then you can see that delivered like a charm. So let's get into it. I was looking at market structure here um, with intermediate term highs, short term highs, and long term highs. So I had this established as a long term high. Why? Because, well, let's break it down, right? Looking at this structure over here, a short term high is established by just a normal swing high, right? High to the left of it is a lower high, to the right of it is a lower high. This is the highest, this is the most obvious one right here that was created, right? What did this price action do? Is we traded up, swept that, and traded back lower. What did we create right here? A short-term high. So a short-term high and a short-term high, if there's a swing high within the middle of that, that automatically makes that an intermediate term high. Intermediate term highs are important. What else makes an intermediate term high? Any high that is created by going up into and redelivering into a daily SIBI like we had right here. So we're going to get into that in a minute. But for now, we're just walking through it, right? Created this short-term high, traded lower. Went back up, created a high right there. Can't really use that for anything at this point because we're kind of just chopping in a range right now, but this is really the price action we're looking at. Traded back lower, went up, took this high. Took that intermediate term high right there. So how we react to that intermediate term high at this point is important because it's going to either completely wipe out the idea that this is going to it's building longer term bearish structure and we're just going to continue higher. But what did we do after we swept out that intermediate term high? Big displacement lower. Below these lows, relative equal lows right here. So this to me was a market structure shift. And then what do? We come up, short-term high, go back down, relative equal lows at 98,200, right? So we have all of this sell side right here. What do we have below this sell side? Opened weekly fair value gap paired with an order block. So for short-term bearish structure, that's a really good draw on liquidity, right? Relative equal lows, fair value gap. What did I say earlier when we were looking at NASDAQ? Anytime you have in a bearish scenario, so with NASDAQ we were talking about bullish, but now this is your bearish scenario. Anytime we have lows or relative equal lows resting right above a BISI, that's going to be a strong magnet and draw on liquidity. So automatically, now that we have structure supporting and good sell side targets, now I really like shorts. Create this intermediate term high. So this intermediate term high stabs and redelivered deeper into this daily SIBI. And now we have a short-term high, an intermediate term high, and a short-term high right here. So this further confirms that this is an intermediate term high. Why? Because this high is the highest one within this daily SIBI right here that created this displacement leg. So what did we say about highs that go up into inefficiencies? Is they're automatically deemed intermediate term highs. Structure is further supporting that because this intermediate term high has a short-term high to the left of it and a short-term high to the right of it. So now let's go. This might be confusing the hell out of you, and I don't blame you. This took me a long time to actually kind of grasp, right? I learned this in the 2022 mentorship, had absolutely no fucking idea what it, like, I was like, you know what, I'm just gonna let this one pass. I don't have to learn it, and you can do fine without it, but once you start to grasp it and understand it, you learn what really powerful fair value gaps are. You learn when we actually are in bearish or bullish structure, and all you have to do is wait for your entry, right? You just got to wait with confidence that you are on side. All right, had a sip of water there. Voice is getting very dry, starting to crack. um, so now we have this structure right here, short term, intermediate term. So we know that this was an intermediate term high. Why? Because it had a short term high to the left of it and a short term high to the right of it. What happens if we have an intermediate term high and an intermediate term high and a high in the middle of those? Makes this a long term high. High, intermediate term high, intermediate term high, long term high. So now we're expecting that this is a long term high and should not get swept until major sell side delivery has occurred and we shift back bullish. That hasn't happened yet. Short-term high right here, displacement lower. Did we sweep this? No. We created more relative equal lows. So this is when I called in the Discord here that I think Bitcoin could see 70K again. I had this right here, and I had this. I didn't have the weekly BISI marked at that point. I was really just looking at this daily one right here. But I had this marked, and I want to get into this. So, within my own study of the last 3.5 years of looking at price action from the framework of ICT concepts, I have a total of 5.5-ish years of um, trading experience under my belt, but with using ICT concepts, it's about three, a little over three now, I think. I was looking at this one right here because within my own study that I actually found earlier this year, this pattern, right? I wouldn't even say pattern, it's more of this structure right here. The first fair value gap that is created after a short-term high is made and we have sell side, obvious sell side to engage, that first fair value gap that's created from the short-term high and we have an intermediate term high established is going to be extremely powerful. For me, that's like my own silver bullet, right? Like ICT has his 10 to 11 a.m. silver bullet. This is really like a silver bullet to me. It's my own personal silver bullet. Like this, these are his concepts, obviously, but it's something that I found in my study of that's something that's very powerful. Where once the short-term high is created, you can expect some delivery from that first fair value gap after the short-term high is created. What did we say about highs that are made inside of fair value gaps? They're automatically termed intermediate term highs. Intermediate term highs are when you have two short-term highs to the left and right of it, or a high that is made inside a fair value gap. So we deliver up into this right here. This was already called a significant fair value gap because it was created from this short-term high. I'm not using the lower one right here, I'm using this upper one. And we have relative equal obvious lows right there. We have an order block, right? These three up close candles. Where is the start of that order block? Right in line with the midpoint of that fair value gap. That's significant. That's algorithmic. So now that this is established an intermediate term high after we hit it, what do we have to the left of it? A short-term high. Now this is not me making this up. This is straight from 2022 mentorship episode 12 when he talks about advanced market structure. Anytime an intermediate term high in a bearish scenario is made and you have a short-term high to the left of it, right here, that is price tipping its hand to you that it is extremely weak. It's like word for word. That's exactly the situation we had right here. So I was anticipating that an intermediate term high was going to be made in this daily SIBI, and we had that short-term high to the left of it. What do we already know with um, price action and ICT concepts? Okay, well this is a daily SIBI and it's paired with a daily order block, so that's good, right? But this structure lets you know that it's great, that you can really expect it to hold. Intermediate term high, short term high, extremely weak drop, right? Into that weekly fair value gap. So that is what I was really looking at. That was my give me 1 second here. All right, sorry about that. That's what I was really looking at right there. And we delivered into this weekly fair value gap. So now, kind of just, I'm still expecting delivery lower, right? But I think we could have a bit of a retracement right here. Not really too worried about it. I don't trade Bitcoin. I just like to analyze it. And yeah, so that's really going to be it for this breakdown here and this weekly outlook. Hope you guys found this helpful. There was, in my opinion, a lot of really good things within here, especially when we were talking about gaps on NASDAQ and then talking about structure here on Bitcoin. So um, yeah, that's going to be it for today. Hope you guys have a good and safe week. Practice good risk management and don't overdo it. And we'll talk to you soon.